Hello, everyone. My name is Jeffrey Kennedy, and welcome back to another episode of Futures Focus. Today is Wednesday, which means it is Softs Day, so let's go and get started and take a look at the coffee market. No real change, as you can see here, and my focus is still to the downside. Yes, we are getting pretty mature within the current decline, down from 372.55, which I've identified as a red wave 3 move. We have hit several of the objectives to the downside, specifically 311.05, below that 295.7, but daily momentum is still down strong, as is weekly momentum. So we're going to continue to leave the door open for further selling down to that 280.3 number. And then if we also incorporate some daily objectives to the downside, our next notable one comes into play at 271.85. So simply put, we're going to continue to look to the downside in the coffee market, bottom line, until we have a reason not to. Now, the outlook or the idea in coffee holds true for the cocoa market. We have moved into our little area here between 39.66 and 37.40. But again, daily momentum is down, weekly momentum is down. Yes, we are mature as far as the sell-off here that began back in early January. Nonetheless, there's no reason to identify a bottom as of yet. We certainly have no evidence to that effect, so we will continue to look lower. Now, as we push lower into, say, the remainder of this week, and ideally into next week, and we do indeed get down to 33.73. Once we do finish this wave 3 decline, the stage will be set for a counter trend move due to the size of degree correction that I'm anticipating. Once wave 3 is complete, we should see something that would indeed have some longevity to it. I like to see proportion between my 4 and my 2, certainly via time-wise, so that move could easily last, say, maybe 4 to 6 weeks, 8 weeks, maybe even as long as 3 months. But the key thing is before we start really embracing the idea of that fourth wave move being underway, we still need to finish the current downtrend. And as of yet, that current downtrend is not yet complete. So bottom line, we still need to give the benefit of the doubt to the current sell-off. Okay, no change in the sugar market. As you know, we're looking down. Prices are moving down. Again, always a good combination. The two levels I would like us to see achieved moving forward. Next would be 1354. Again, that level has not changed, nor has 1274. Those levels are applicable on the intraday time frame as well as the daily chart, as you can see here. Again, we are looking lower. Now, if need be, we do have a lower target below 1274. That's derived from the weekly price chart, and that number comes into play, as you can see here, 11.4. So rather than having our attention or our sights set on 11.4, as you know, I like to stair step the advances and the declines in this case. So let's make it to 1354. If wave patterns are incomplete, then of course we will lower our attention to 1274 next. But just like in coffee and in cocoa, the daily momentum is down in sugar, as is the weekly momentum, so we will indeed continue to look lower as we trade throughout the month of February and ideally into March. Okay, no change in cotton market. Big picture, I'm still looking for a very significant low this year in 2026. But short term, intermediate term, there's nothing on the price charts as of yet to indicate that such a low, such a bottom has indeed occurred. So we will continue to look lower in this market. We have a little bit of support coming into play at 60.70 or 60.70. I do think that's just simply going to prompt a little bit of, say, a pause, minor fourth wave correction, as you see here. Key resistance for the market, I think we could actually put that this little span on the chart between 62.20 and 62.55, and then once we see enough advance, ideally into early next week, Monday, Tuesday, look for further selling to the downside, ideally targeting 59.77. And basis the daily price chart, I do have a number coming in a little bit lower here at 60.18. But remember, as I mentioned in the Friday weekly reviews, and also too in some of the commentary from, say, last Wednesday and the Wednesday before that, it's important to put short-term price action or intermediate-term price action into a larger context. So again, short-term, i.e. the intraday price chart, I am looking down. Intermediate term, yes, I'm continuing to look lower as we trade throughout February, again into early March. But remember, bigger picture, really what I'm going to be anticipating in 2026, as I was in 2025, is I'm going to be looking for the end, the culmination, essentially, of the decline that began back in 2022. So essentially, the move that began here in 2022, I'm looking for it to terminate this year. And when it does, yes, I am going to be looking for that significant move higher. But until we have something that we can sink our teeth into that would argue that we do indeed have a tradable low, we still need to have our attention focused downward. Well, that's about it for me for today. As always, thank you very, very much. Have a wonderful day, and I will see you on Friday for the weekly reviews.